Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, February the 4th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about everything from economic to geopolitical and market analysis. Well, I do that similar here in these webinars and in daily market commentaries where I talk about the economic data, how that impacts the overall markets. And then I layer something on top of that with options and how we can take advantage of the assumptions we come up with through that economic data and the market setups to increase the yield in our portfolio, lower our cost basis in some of those stocks that we already have in our portfolio. So without further ado, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, with that out of the way, let's get on with the economic data and see how we think that's going to impact the market. Well, we don't have a whole lot, especially across the pond. We've got our factory orders here in the United States coming in at 1.8%, expected to be 0.7%, so beating by a full percentage point or better. But we did get a revision to last month's number down by a 0.5% from negative 0.7 to negative 1.2. So kind of making that front headline number not really look as great, but still a nice beat on that one. And then the economic optimism coming in at 59.8, better than the 58.3. And then later on this week, we have some actually really pretty good economic data. We get some services PMI, and remember on Friday, we have the unemployment numbers. So we got some good economic data coming out later on this week as well. So we'll keep our eye out for that. But I'm pretty happy with that factory orders number. I'm not necessarily expecting to see all of these numbers coming out. Remember, though, some of this was a little bit before that coronavirus. It's going to cause some of these orders over in Japan. It's going to cause some of the U.S. companies to have some trouble getting supply from over there as well. So all of that being said, we've got to take these economic data points right now for, lack of a better word, for what they're worth, and maybe discount them just a little bit. All right, let's move over to the markets. We've got crude oil right now just above $50 a barrel. We settled above $50 a barrel after testing that, or settled above $50 a barrel yesterday after testing $50. Now we're back up and above that as well. Right now, just up 30 some odd cents. Now remember, I put on a couple bullish trades with XOP yesterday, which is the exploration ETF, and USO, playing that to the upside. They weren't looking too good after I put those trades on yesterday, but I'm liking the way that the market looks like a setup here with this candle at the bottom here, testing that $50 a barrel. I think that, we're going to see that there is not a whole lot of price acceptance down here at these levels. We're going to see a bit of a rebound. So, yesterday was a perfect opportunity to go up, and even though I only had a half a tank of gas, fill it up. I traded all the way across the board, you guys. I don't just trade online. I take that into life. Got to fill up your tank when you're getting bullish in crude oil, despite the fact that you're not empty. All right, gold futures are coming off by about 23 points today. This is a flight to quality right now, taking money out of the safe haven of gold and basically jamming it into the rest of the equities. Markets are moving higher today, and Tesla is just going bonkers. All right, we've got the bonds coming off by about 1.5 right now. Bit topping. I've talked about this as well. I think that the sweet spot is down here at around this 160. The problem here we're having is seeing this inverted yield curve. The FOMC, and the monetary policy people are really not liking that. They're thinking, well, now we need to lower the front end of the curve to try and get that yield curve back into normalcy. Well, at the end of the day, the markets are pushing it that way, signaling a recession. I don't know. They probably should lower interest rates a little bit more, but I don't know if there's two in this year, but that's what the market is starting to price in. We're seeing some good economic data here, which would lead one to believe that maybe that doesn't need to happen. But again, coronavirus has not been really in on those economic data points. That wasn't a consideration. All right, so we've got the VIX coming off as we're seeing the equities rise. We've got the Dow Jones up about 425 points on the day, and the NASDAQ making a new all-time high again, up 171 points. Didn't take long to get that little bit of correction. I talked about that. We're probably a little bit overdone to the downside. I like the fact that we're getting this gyration back and forth. That's really working through this and building up some nice volume price acceptance at these levels. So this seems very strong to me. You know, when we started selling off a little bit, we sold off pretty fast and faster than I expected, and price just really not being accepted in the market, really turning around to the upside right now. E-mini S&Ps up about 50 points right now on the day. Again, near the highs. No real attempt to flush out any of the shorts, which makes this feel very bullish. Remember, we talk about this. Overnight inventory gets long, and we usually have a tendency to see the day session want to flush those guys out. Did not happen. Market is just unabated to the upside all night, and day session guys didn't blink an eye and actually jumped on board with that to the upside. So what else was it? Oh, I was going to show a chart of Tesla. This Tesla chart is bonkers. And, you know, you guys know me. I just think the pricing for Tesla is way overdone. At like $800, you guys, their market cap was more than the big three, that being Ford, GM, and Chrysler. All right, all three of those guys making cars, and somehow Tesla's market cap is more than all three of those guys combined. To me, that just doesn't make sense. I don't know how that can happen. I don't think that they're going to end up making as many cars as the rest of the big three at any given time. So anyway, that's just my soapbox, but I wanted to show this because Tesla is just off to the races. I mean, you can see they traded $940 in a very short time. You can see in a matter of a couple months, we went from basically $230 to $900. That's just insane to the upside. So Tesla buyers or Tesla owners of that stock are just absolutely loving life. All right, that's about all I got. I got a webinar today. We're doing the Festival of Traders, so check that out. There's I believe five speakers today going to be talking about everything from market setups and how to read the tea leaves in the markets, and I'm going to be talking about options. So check that out at protraderstrategies.com. That's about all I got for you, other than if you can't take that, take it easy.